At this hour, China's State Council has unveiled what it called a special action plan to boost domestic consumption, featuring measures including increasing residents' income and establishing a child care subsidy scheme. Meanwhile, US consumer confidence plummeted to lowest levels since November of 2022. American consumers they see inflation at 3.9% in 5 years, which is highest since 1993. Now, how are the world's two biggest economies faring in these uncertain times? And what does it mean for Indian market as a whole, including stock market, that has seen massive FII outflows? Now, to discuss all that, we have with us Santosh Rao, Head of Research and Partner, Manhattan Venture Partners. Good evening to you, Mr. Rao. First of all, let's begin by talking about
Morning.
these two incidents. How do you see them impacting two biggest economies in the world?
The tariffs? Oh, I'm sorry, what I missed the earlier part of your question. What was that?
I want to say, how do you think see these things impacting U.S. consumers, U.S. Overall, the biggest economy in the world? How do you see these overall developments impacting U.S. consumers?
Yeah, if I got your question right, I think overall right now, the US consumer is getting cautious. Uh, the underlying data right now is kind of soft, but people are really worried about the future. What's coming down the pike? The inflation expectations are high, and that kind of feeds into the narrative, and that one thing leads to another. So the prices keep going up. So the big inflation, the resurgence of inflation is a big issue. So you want to clamp that down. So let's see. Right now, it's still in a holding pattern. Let's see where the tariffs that are expected to go into effect in April, first week of April or early April. Let's see how the reciprocal tariff regime plays out. So I think still a lot of ifs, ands, and buts right now. But in general, the consumer has become cautious. Companies have become cautious, not expecting what to expect down the road. Current data is okay. It's kind of on the soft, but still okay. But down the road, people are worried that things will get worse.
And China coming up with this particular plan to boost consumption, do you think the engine of economy, world economy, which was once firing at all cylinders, is now cooling down? And what does it mean for India as well?
Yes, absolutely. I think consumer has been a big part of US story. They have held up very well. They've been pretty resilient. The last thing you want is the consumer slowing down and the GDP slowing down. So I think that'll have an effect all over the world. But at this point, it's still early to say. Yes, the consumer is buying lower, is going down the price curve, but he's still there. The discretionary spending is still there to a lot extent. But I think a lot depends on where we see the future lies. And it's kind of disruptive what Trump is doing, not necessarily bad, but it's kind of disruptive. It's happening too fast and not telegraphed very carefully and systematically. And that's what's unnerving the market. But overall, the consumer is still okay. It's softer, but it's still okay, and that'll hold up the economy. So let's wait and see. The retail sales data today was okay. It wasn't that bad, but it was okay. So things like that. So data is softening, but it hasn't fallen off the cliff. So I think in that sense, US is holding up pretty well, and let's see where that goes down the road.
And what does it mean for Indian stock market that has seen massive FII outflows? What does it mean for India and stock markets?
Yeah, I think the foreign funds flowing into India will ultimately will come into India because India is the fastest growing economy in the world. It has good fundamentals, but it's really timing right now. There's much better risk reward outside India at this point. China is developing. It's still weak, but it's developing. Money is flowing there as well. So I think right now money is getting scattered around other places, but ultimately it will come back to India. There's a lot of funds that flowed into India. Now they're coming out. People took profits, investors took profits and invested in higher yielding US stocks. But even here, the rates, the bond yields are coming down. So slowly, the risk reward is getting much better in the Europe and other areas, other emerging markets. So you will see FII still come down quite a bit, but down the road, over a long term, I think I see India money coming back into India because that is really where the growth is.
And moving forward, on March 19, we have Fed rate decision coming. How do you see these developments impacting the Fed rate's decision to cut rates or not?
Yeah, I'm sorry, on March 19th, what was that? What was your question?
Fed is going to take a call on
Yeah,
whether to
okay.
cut rates
Yeah,
or not.
absolutely. I don't think he's going to cut. He's still waiting. The last thing they want is he's already said that he wants to see where the fiscal policy is settling. He's still not sure what Trump wants to do, so he wants to wait it out. My bet, I'm in the camp that we'll probably have one cut this year and more next year when the economy is expected to slow down next year if all the effects come into effect, come and take place. But at this point, this year, I think it's going to be just one cut because the prices are still high and threat of inflation is still very high. And with tariffs and all that, there might be a spike in inflation. So I don't expect too many cuts. Originally, I came into the year thinking we'll have two cuts in the second half of the year, but I think it's just going to be one cut in the later part of the year. So Fed is really going to stay on course, say that we are going to wait and see.
And talking about retail sales in America, and talking about the overall tariff war, which Trump has started, how do you see these events, in fact, taking inflation up? Because if there are tariffs on the goods that are imported into coming into America, it's going to be expensive for Americans to buy, so it's going to have inflation go up more.
Yes, that's the million-dollar question right now. And the Trump administration thinks it'll be net positive for US. It'll be fair trade. He wants to do it reciprocal. He doesn't want to be punitive. He thinks it's only fair that America gets its share. So let's see how where that lands at this point. Right now, there's a little bit of nationalism playing into every country. They don't want to be pushed around. But overall, cooler heads will prevail. And yes, there might be a slight spike initially, but overall, Trump is aware of the economy. He wants to keep the economy going. He's front loading his whole administration. He's getting all the unpopular things right up front, unlike his first term, where he got it towards the later part of his term. Now he's just putting it all in, and later on, he believes that the good parts of all this inflationary, of this tariffs and the money flowing in will help to lower taxes and help the consumer. He believes, and I also kind of at this point, I want to give him the benefit of doubt that the tariffs net, there will be a slight bump in prices, but not that much. And overall, I think the world will adjust around the new regime. And that's what, if Trump is right, that the trade is not fair at this point, America is being unfairly tariffed. So if he thinks if it evens out, then I think it's good overall. So let's wait and see. At this point, we don't know how the other countries will react. Yes, they will reciprocate, but he's saying is we're not punitive. We just want to do what's right and just reciprocal. So let's if that's the case, then I think it should be a fair trade.
All right, Mr. Rao, thank you for joining us this evening and giving us these important perspective on these developing stories. And